The Institute Cargo Clauses, ICC, are a globally recognized set of standardized insurance terms developed primarily by the Institute of London Underwriters, now part of the International Underwriting Association, to provide clear and consistent coverage for marine cargo insurance. These clauses were introduced to replace the outdated ship and goods policy, which had been the traditional marine insurance document. The ICC were first formalized in 1912 but underwent major revisions in 1982 and later in 2009 to reflect modern trade practices and legal requirements. They are closely aligned with the Marine Insurance Act 1906, UK, but are used internationally, making them a cornerstone of global cargo insurance. The primary purpose of the ICC is to define the scope of coverage, exclusions, and obligations of both insurers and policyholders in a standardized manner. By providing clear terms, the ICC help reduce disputes over claims and ensure that businesses can secure appropriate protection for their goods during transit. The clauses are commonly incorporated into trade contracts, particularly under CIF, cost, insurance, and freight agreements, where the seller is responsible for arranging insurance. ICC All Risks Coverage. This is the most comprehensive level of protection, covering all risks of physical loss or damage to the cargo unless explicitly excluded. The term, all risks, can be somewhat misleading, as it does not mean that every possible loss is covered. Rather, it covers all accidental and external risks unless they fall under specific exclusions. Some of the key exclusions under ICC include willful misconduct by the insured, ordinary wear and tear, inherent vice, natural deterioration of goods, insufficient or defective packing, and losses caused by delay. Additionally, risks such as war, strikes, and terrorism are excluded unless covered by separate clauses, such as the Institute War Clauses or Institute Strikes Clauses. ICC Named Perils Coverage, Intermediate Protection. This clause provides a middle ground option, covering only those risks that are specifically listed in the policy. Some of the key perils insured under ICC include fire or explosion, stranding or sinking of the vessel, overturning or derailment of land transport, discharge of cargo at a port of distress, general average sacrifice, voluntary loss to save the voyage, and jettison, throwing cargo overboard to save the ship. However, unlike ICC, it does not cover risks such as theft, pilferage, or water damage unless directly caused by an insured peril. The exclusions are similar to ICC, but are more restrictive in practice. ICC Basic Named Perils Coverage SADFACE Minimum Protection. This is the most limited form of coverage, protecting against only the most severe and clearly defined perils. The insured risks under ICC include fire or explosion, vessel sinking or stranding, collision or capsizing, general average sacrifice, and jettison. Notably, it excludes many common risks, such as theft, water damage, and breakage, unless directly caused by a listed peril. Due to its restrictive nature, ICC is typically used for low-risk cargo or when the buyer is willing to assume more risk. Common elements across all ICC clauses. While the three main clauses differ in coverage, they share several fundamental features. Warehouse-to-warehouse coverage. The insurance applies from the moment the goods leave the seller's warehouse until they reach the final destination, ensuring continuous protection during transit, including land and sea journeys. General exclusions. All ICC clauses exclude losses arising from war, strikes, riots, nuclear risks, and intentional damage by the insured. These can often be added back via supplementary clauses. Claims process. Policyholders must notify the insurer promptly in case of loss and take reasonable steps to minimize damage. Proper documentation, such as the bill of lading, commercial invoice, and survey reports, is required to support claims. Duration of coverage. The insurance remains in force during ordinary transit but may terminate if the journey is unreasonably delayed or if the goods are stored in an unapproved location. Significance in international trade. The ICC play a crucial role in global commerce by providing a uniform framework for cargo insurance, reducing legal uncertainties, and facilitating smoother trade transactions. They are widely referenced in letters of credit, LCs, and international sales contracts, ensuring that all parties understand their insurance obligations. Businesses choose between ICC, A, B, or C, based on factors such as the value of goods, susceptibility to damage, and cost considerations. For high-value or delicate shipments, ICC, A is preferred, whereas ICC, C may suffice for bulk commodities or low-risk items. Additionally, specialized extensions, example, war or terrorism coverage, can be added to meet specific needs. Conclusion: the Institute Cargo Clauses, ICC, are an essential component of marine cargo insurance, offering structured and widely accepted terms to protect goods in transit. By providing three distinct levels of coverage, all risks, A, named perils, B, and restricted perils, C, they allow businesses to tailor their insurance to match their risk exposure. Their standardized nature helps prevent disputes and ensures that international trade operates smoothly. For companies engaged in global shipping, understanding the differences between these clauses is critical to selecting the right protection and avoiding unexpected losses. Thank you for watching the video. For more marine topics, please subscribe the channel. Please help us with your valuable feedback to improve the contents.